Jeep and Ram just announced something very bold, and it has got the entire car market buzzing. Ram and Jeep have been finding it hard to sell vehicles of recent, and so, in a bid to rectify this situation, they're now offering a massive price slash across the board. So now, dealers everywhere are prepping for some drastic price cuts. And when I say drastic, I mean the kind of price slashes that make you do a double take. But this isn't just about clearing out their inventory. Nope, there's something way deeper going on here. And the reason behind it, let's just say it'll have you questioning everything you thought you knew about the car industry. So are these cuts a desperate move to boost sales? A bold strategy? Or is there something completely unexpected happening behind the scenes? Stick around because we're diving into all of it. And trust me, you don't want to miss what's coming next. Jeep and Ram dealerships across the US are currently facing this massive headache that's been creeping up on them for a while. It's kind of wild when you think about it. Just take a drive past any dealership and you'll see it, rows and rows of shiny unsold SUVs and trucks just sitting there. There's so many of them that some of these dealerships basically have no more space on their lots. Of course, the dealerships are not taking this well, and some of them are probably tearing their hair out. What used to be a steady stream of revenue has turned into a giant parking lot of problems. This didn't just happen out of the blue though. Stellantis, the company behind Jeep and Ram, made a big gamble a while back. They decided to double down on high-end luxury trucks and SUVs. You know, the kind loaded with all the fancy features, massaging seats, huge touchscreens, and more bells and whistles than you'd think possible in a truck. The idea was that people would flock to these pricier models because, hey, who wouldn't want a little extra luxury, right? But life had other plans. Rising interest rates hit like a ton of bricks. And let's not forget all the economic uncertainty out there. People are tightening their belts, rethinking what they really need versus what they want. Suddenly, dropping a ton of money on a tricked out Ram 1500 or Jeep Grand Cherokee doesn't seem so appealing. Now these dealerships are stuck with way too much inventory. Imagine the costs they're dealing with, keeping these trucks maintained, storing them, and paying for financing while they just sit there. It's brutal. Jeep and Ram have been household names for like forever. Vehicles like the Jeep Wrangler and the Ram 1500 used to be the top pick for so many Americans, but lately things have shifted. People are starting to ask, are these vehicles really worth the price? The biggest sticking point, of course, is affordability. Let's be real, these trucks and SUVs have gotten crazy expensive. A fully loaded Ram 1500, for instance, can hit a six-figure price tag. 6 figures. That's basically mortgage money in some places. Meanwhile, brands like Ford and Chevrolet have been stepping up their game, offering trucks that deliver on quality without draining your bank account. So, if you're a buyer looking at the sticker prices, it's no wonder more folks are leaning toward the competition. And it's not just about the price, there's also this shift in priorities. More people are looking for fuel efficiency or even going electric. Ford's F-150 Lightning, an all-electric truck, has been a hit with buyers who want something tough but also environmentally friendly. Stellantis hasn't made as much noise in the electric truck space yet, which might be another reason they're falling behind. Also, you've probably noticed how much the car world is changing lately. There's been a gear shift in vehicle preference lately, especially in younger customers. This group of consumers are shifting gears, literally, and looking for hybrids and electric vehicles. These cars aren't just trendy, they're more eco-friendly and way cheaper to run over time. Now, Stellantis hasn't exactly kept up with this movement. Their lineups are still focused on gas guzzlers, leaving a pretty big gap when it comes to appealing to this new wave of environmentally conscious buyers. But that's not all. Stellantis has also taken a hit when it comes to reliability. Jeep Wranglers, for example, have had ongoing transmission problems, and Ram trucks have been plagued by recalls. Buyers are paying attention, and trust in the brand is taking a nosedive. Throw in the fact that competing brands are packing their vehicles with cutting-edge tech, and it's no wonder Stellantis is losing some of its shine. So, in order to win back some market share and persuade customers, Stellantis is looking to slash prices on Jeep and Ram vehicles by as much as 30%. If this happens, it would be one of the boldest moves we've seen from an automaker in years. But let's be real, a discount that steep isn't just about clearing inventory. It screams, we've got some serious problems to fix. Automakers often use rebates, incentives, or factory-backed discounts to help dealers move slow-selling cars. But a cut as dramatic as 30%? That's next level. It's not just about getting rid of unsold vehicles. It's about winning back trust from buyers who feel like these cars have become overpriced, or frankly, not worth the trouble. Word on the street is that these price cuts could roll out as early as the second quarter of 2025. While it sounds exciting for buyers, it's making a lot of dealers nervous. If people think prices are going to drop soon, why would they buy now? It's a tricky balancing act for Stellantis. They have to be upfront with customers, but not create a panic that stalls sales even more. For Jeep and Ram dealerships, the situation is pretty grim. Imagine having a parking lot full of shiny new vehicles that no one's buying. Each one of those cars represents money that dealerships don't have because they've already borrowed to stock them. The interest payments on those loans, called flooring fees, just keep piling up. For smaller dealerships, this is especially brutal. Some are barely hanging on. To survive, many dealers have already slashed prices on 2023 and 2024 models, with discounts of 10, 20, and even 30%. And guess what? Even those deep cuts haven't been enough to clear the lots. Now, with rumors of factory-backed discounts on the horizon, dealers are stuck in a tough spot. Do they sell now at a loss or wait it out and risk being undercut later? You know how in any good partnership, trust and teamwork are everything, like when you're on a group project and everyone pulls their weight. Well, that's the kind of relationship automakers and dealerships are supposed to have. A true partnership where both sides win. The automakers roll out the vehicles, the dealerships sell them, and everyone makes a little money while keeping customers happy. But right now, Stellantis is in a bit of hot water. Their once solid relationship with their dealers is starting to feel like a group project where one person stops answering texts. Let's talk about what got them here. Like we said earlier, for some reason, Stellantis decided to make a big bet on high-priced, luxury-oriented trucks and SUVs. They were aiming for those premium buyers, the ones who don't blink at six-figure price tags on a Ram truck that comes with all the bells and whistles. It probably seemed like a winning strategy on paper. Luxury equals higher profit margins, and who doesn't love a big paycheck? But Stellantis rolled out this plan at the worst possible time. Rising interest rates, inflation, and tighter household budgets made those premium vehicles feel like they belonged in a museum instead of someone's driveway. So instead of selling like hotcakes, they're just sitting there. Lots full of shiny trucks that dealerships can't move. Now, if you're a dealership, this isn't just inconvenient, it's a financial nightmare. You've got loans to pay on all that inventory, called flooring fees, plus maintenance and storage costs. Every unsold truck is like a ticking time bomb, eating away at your profits. And that's before we even get into the rumors about price cuts. At first glance, the news that Stellantis wants to slash prices might sound like a dream come true for buyers, but for dealerships, it's more like a bad dream. Let's explain how. Imagine you're a dealer with a lot full of 2023 and 2024 Ram trucks. You paid full price for them, expecting to sell them at a profit. Now Stellantis is about to roll out 2025 models at massive discounts. Suddenly your older inventory isn't just hard to sell, it's practically worthless. And even if you manage to offload it, buyers will start expecting discounts on every new Ram truck, cutting into your margins even more. It's a lose-lose situation for dealers. They're stuck between selling at a loss now or holding out and risking even bigger losses later. It's like being in a game of financial chicken and nobody's winning. What's making this whole situation even worse is the lack of communication from Stellantis. Dealers are raising the alarm, asking for help, and crickets. They're not getting the answers or support they need, which only adds to the frustration. This isn't just a dealership problem, it's a Stellantis problem, and honestly, it's a Jeep and Ram problem too. When customers see rows of unsold vehicles at their local dealership, they start to wonder, is something wrong with these cars? Why aren't people buying them? And when those vehicles eventually sell for huge discounts, it can hurt the brand's image. Suddenly, Jeep and Ram go from being premium, reliable names to that company that always has clearance sales. The ripple effects don't stop there. If dealerships start to close because they can't keep up with the financial strain, it's bad news for everyone. Customers lose out on local service and support, and Stellantis loses a key part of their sales network. It's a downward spiral that nobody wants. Now, how would this price cut reshape the market? If Stellantis moves forward with slashing prices on Jeep and Ram vehicles by 30%, it will send massive shockwaves throughout the entire automotive market. This kind of discount is almost unheard of, especially for iconic brands known for their ruggedness and reliability. The fallout would extend far beyond Stellantis' own sales numbers, forcing competitors like Ford, General Motors, and Toyota to reevaluate their pricing strategies and perhaps even spark a price war in the industry. Yet the consequences could ripple throughout the automotive landscape. landscape, reshaping consumer expectations for what cars and trucks should cost. Suddenly, what was once considered a premium product might be seen as undervalued, raising serious questions about the true worth of these vehicles. The price war that could emerge might make consumers hesitant, wondering if the price of a brand new vehicle really reflects its quality and long-term value. For Stellantis, the immediate goal is to move the large backlog of unsold vehicles, clearing out 2023 and 2024 models that are stagnating on dealer lots. However, this short-term focus on inventory could come at the expense of their long-term brand strength. The risk is clear. Such drastic price cuts could damage the perceived value of the Jeep and Ram brands. Historically, these brands have been associated with toughness, reliability, and a no-nonsense approach to building vehicles that stand up to tough conditions. Jeep, with its adventurous off-road reputation, and Ram, with its workhorse image, have cultivated a loyal customer base that's willing to pay a premium for vehicles that they trust will last. But if these vehicles are suddenly discounted by 50%, it could send the wrong message, that the vehicles weren't worth the original asking price to begin with. This perception shift could chip away at Jeep and Ram's hard-earned image as reliable, premium products and change how consumers view the brand in the future. If customers start questioning the value of these vehicles, they may also hesitate to make a purchase, even at a discounted price. It's a delicate balancing act, getting rid of inventory without undermining the trust that has built these brands' reputations over decades. The effects of these steep price cuts would not be confined to new vehicles. The used car market is also in for a rough ride. Jeep and Ram models hold their value relatively well, often making them a smart investment for buyers looking for something that will retain its resale value. However, if new models are discounted so heavily, the resale value of older models will inevitably take a hit. Consider a scenario where someone recently bought a new Ram truck for $60,000. After Stellantis slashes prices on new trucks by 50%, suddenly similar trucks are available for half the price. The depreciation of the older model is severe, potentially wiping out tens of thousands of dollars in value. For those who finance their vehicles, this could lead to a shocking realization: they owe more than the vehicle is now worth. This could particularly sting for people who bought a new Jeep or Ram with the assumption that their vehicle's value would hold steady over time. With prices falling so drastically, those consumers could find themselves underwater on their loans, facing a situation where their vehicle is worth significantly less than they anticipated. For some, this could mean major financial losses and the painful reality of being stuck with a depreciating asset. Now, what could consumers gain? While dealerships and current owners might be feeling the pain of these steep price cuts, there is one group that stands to benefit: consumers in the market for a new vehicle. For the savvy shopper, these price reductions could present an unprecedented opportunity to snag a new Jeep or Ram at a fraction of the usual price. Imagine walking into a dealership and finding a brand new Ram 1500 or Jeep Wrangler priced at 30 to 50% off. It's hard to believe, but for buyers who act fast, this could be a game changer. Deals like this are virtually unheard of, especially for high-demand trucks and SUVs that typically maintain their value. The sheer savings on a new vehicle could make it an incredibly appealing option, and buyers could find themselves driving away with a great deal. Even the used car market would likely experience a dip in prices, as these dramatic price cuts on new models could push older vehicles down in value as well. For consumers looking for a used Jeep or Ram, this could create an influx of more affordable options, further driving down prices across the board. However, it's important for buyers to proceed with caution when considering these massive discounts. While the allure of a bargain is strong, it's important to ask why Stellantis is making such drastic cuts in the first place. Drastic price reductions don't happen without reason, and there could be underlying issues that consumers should be aware of. It's worth asking if there are quality concerns or design flaws that could be driving this move. Are these vehicles facing reliability issues that are prompting Stellantis to slash prices just to get them off the lot? Or is it simply a case of oversupply, with too many vehicles on hand that need to be cleared out before they lose all value? These are important questions to consider, especially when a brand like Jeep or Ram, known for its durability, suddenly faces such a drastic price drop. Moreover, buyers need to think long term. While a heavy discount today might seem like a great deal, what about a few years down the road? If the resale value of these heavily discounted vehicles continues to drop, buyers could be left with an asset that loses its value faster than they can make payments. Will the new Jeep or Ram still hold its value when it comes time to sell or trade it in? It's important to consider the future implications before diving into what seems like a golden opportunity. Despite the considerable concerns surrounding Stellantis' steep price cuts, the allure of such discounts is undeniably powerful for many consumers. A once-in-a-lifetime chance to own a top-tier Jeep or Ram vehicle at a fraction of the cost is a tempting offer. For those with their eyes on a new truck or SUV, this could feel like the deal of the century. However, navigating this landscape requires more than just jumping at the first opportunity. Buyers need to carefully assess the long-term value of their purchase and weigh potential risks against the rewards. Those who approach this situation with a strategic mindset may find that the market shakeup creates a rare personal victory. For many, the appeal of the savings can cloud the bigger picture. This is, after all, a major disruption in the market, and while some will view these price cuts as a way to own an iconic vehicle for less, others may question whether it's too good to be true. It's essential for buyers to ask themselves why these vehicles are being discounted so heavily, and whether there are any hidden drawbacks they need to consider. Beyond the immediate financial fallout, Stellantis' decision raises some unsettling questions about the long-term reputation of Jeep and Ram vehicles. These brands have long been associated with quality, reliability, and a rugged sense of adventure. They've built an image over decades that appeals to a loyal customer base, many of whom are willing to pay a premium for vehicles they trust to perform and last. So what are dealers gonna do about this situation? To make it through, dealerships are pulling out all the stops. They're taking a fresh approach by focusing on what they call volume over margin. Translation, they're selling as many cars as possible, even if it means making just a little profit on each one. Think of it as the retail equivalent of a little goes a long way. The idea is simple. If you move enough vehicles, those smaller profits add up and can help offset losses from the slowdown. But cars aren't the only game in town for dealerships. A lot of them are leaning on their service and maintenance departments. These departments are like the safety net for the whole business. People might delay buying a new car, but they're not going to ignore that weird noise their current car is making or skip their regular oil changes. Whether it's fixing brakes, rotating tires, or diagnosing engine issues, these services keep money coming in and the lights on. Now, some dealerships are taking things up a notch by heading straight to the source, Stellantis. They're asking for a helping hand in the form of financial support. That means negotiating for factory rebates to make the vehicles more affordable, lowering flooring fees. Those are the costs dealerships pay to keep inventory on their lots, and even some extra marketing dollars to attract buyers. It's a smart move because smaller dealerships, especially the family-owned ones, are at real risk of closing without that kind of support. And if that happens, it's not just bad news for the dealers. It's a problem for Stellantis too, since fewer dealerships mean a weaker network to sell their cars. Here's the thing though, these strategies aren't permanent fixes. The real challenge is figuring out how to stay afloat if aggressive pricing becomes the new normal in the market. Dealerships will need to find ways to balance staying competitive with not eroding their profits entirely. One crucial factor in their survival will be their relationships with their communities. A dealership isn't just a place to buy a car, it's often a trusted business that sponsors local events, donates to schools, and supports local charities. That connection can make all the difference when customers are deciding where to shop. Let's zoom out and talk about Stellantis itself. First, the immediate goal is clear. Stellantis wants to regain lost market share. Over the past few years, competitors like Ford, Toyota, and even some up-and-coming electric vehicle brands have been stealing the spotlight. By slashing prices, Stellantis is hoping to remind buyers why they loved Jeep and Ram in the first place. After all, who doesn't like a good deal? The auto industry is in the middle of a major transformation, with electric vehicles, self-driving technology, and advanced connectivity leading the charge. Companies like Tesla, Ford, and Toyota are pouring billions into these areas, trying to shape what the next generation of cars will look like. Stellantis, meanwhile, is taking a financial hit by cutting prices. The question is, will they have enough resources left to keep up with this rapid evolution? If they don't, they risk falling further behind in a race that's already moving at lightning speed. That said, this strategy isn't all doom and gloom. If Stellantis can execute it well, it could pave the way for a big comeback. By bringing customers back into the fold, rebuilding trust, and getting their vehicles back on the roads in large numbers, they might just re-establish themselves as a top contender in the market. But let's be real, the stakes couldn't be higher. This isn't just a roll of the dice. It's more like playing poker with everything on the line. While it might sound like a win for consumers, it could send shockwaves through the entire auto industry. industry. Competitors like Ford, General Motors, and Toyota might feel the heat and decide to drop their prices too. And that's how a price war could erupt, a fierce battle to win over budget-conscious buyers. Now, for consumers, this sounds like a dream come true. Cheaper vehicles and plenty of options. But for automakers, it's a nightmare. Lower prices mean razor-thin profit margins, which can spell trouble, especially for smaller or less financially stable brands. Big players like Ford and Toyota might weather the storm thanks to their deeper pockets and diversified portfolios, but smaller automakers or niche brands could struggle to keep up. In the worst-case scenario, some could even be forced out of the market altogether, reshaping the industry landscape. Another interesting thing to consider is that a lot of automakers have poured billions into developing EVs, positioning them as the future of transportation. But if Stellantis starts selling gas-powered trucks and SUVs at steep discounts, consumers might flock to those deals instead of spending more on an EV. After all, when faced with a shiny new gas-powered Ram at a bargain price, how many people will choose a pricier electric alternative? This shift in consumer behavior could slow down the adoption of EVs, which would be a major setback for the industry's push towards sustainability. For competitors heavily invested in EVs, like Tesla or even Ford with its electric F-150 Lightning, this creates a dilemma. Do they lower EV prices to compete with Stellantis, potentially sacrificing profits? Or do they stick to their guns, banking on the long-term appeal of eco-friendly technology, even if it means losing market share in the short term? If this price war spreads, automakers will need to find a delicate balance between keeping their vehicles affordable and continuing to innovate. Research and development don't come cheap, especially in areas like electric powertrains, advanced safety systems, and autonomous driving technology. Cutting prices to stay competitive might leave less money for these critical investments, putting brands at risk of falling behind in the race for the future of transportation. For Stellantis, this is where their gamble could have the biggest ripple effect. If their pricing strategy undermines the broader market's ability to invest in innovation, it might delay progress in EV technology and sustainability goals. On the flip side, if they play their cards right, Stellantis could create a niche for themselves as the affordable, reliable choice for buyers who aren't quite ready to make the leap to electric. The question now is, will this strategy ignite a pricing revolution in the auto industry, or will it backfire, leaving automakers scrambling to recover? One thing's for sure, it's a high-stakes game, and everyone's watching to see how it plays out. What do you think? Would you jump on a discounted gas-powered Jeep, or would you stick with the promise of an electric future? Let us know your thoughts in the comments section.